IVM.
All right, welcome to Shunya One, episode 89. We are back on another show.
Yes, we are. How long has it been since you've done an intro now?
It's been a long time.
It has been a long time.
Yes. We, in fact, had a rebroadcast last week as well.
Yes, we did. Good show. We had Zainab's episode, but the episode before that, Kanchan's episode, was really well received. And
Exactly.
I think it was a really fun episode, too.
It was fun. Finally got Kanchan down from Canada and managed to get him to tell us about some interesting stories. We had a poll.
We had a poll about what his interests were, or rather what his business is about, right? And so the question was, what is going to have more impact of the banking sector in the short run? Technical solutions or regulatory issues? And the overwhelming answer was regulatory issues. 90% of the people thought that that's going to be the one that's going to have a big deal.
I mean, it's funny that that's become the sort of primary thing in the fintech space.
Right.
And I am hearing this more and more even from folks in fintech.
Regulation management, right? That's
Funnily
the
enough,
biggest part of the... So we have a fintech company that's upstairs, right? And a big part of their business is basically managing regulations rather than just doing the technical part of things.
Yeah. But that's also because I think India specifically has been doing things in this space. They've actually been more open than most other countries in supporting fintechs.
Which is an unusual thing to say about India, especially in a TikTok world.
I know.
Or in a non-TikTok world.
Or a non-TikTok world now.
Yes.
We don't know how long this
Apparently
will last.
it will also not be a PUBG world for long.
Oh no.
Rajkot High Court is apparently...
Fun times ahead.
Yeah, I know.
Wonderful.
Let's move on.
Let's move on. Let's get into our show.
Ourselves.
We have a fun show lined up.
Yes, we do.
We actually have someone in the studio who's been a startup founder and has exited the startup world with cash.
Money.
And it's a very interesting story. We're going to be talking to Harpreet Grover about his story. So let's get on with the show. All right, welcome to the show. Harpreet, how are you doing?
I'm good, man. Thank you so much for having me here.
Well, it's great to have you. Thank you for making the time. I know you are now a busy entrepreneur,
Exited founder.
Chilling after your last startup, or are you already on to another one?
So I'm saying actually today is our last day. So, it got acquired. CoCubes got acquired by Aon Hewitt.
Okay.
And today is the last day.
And we have you here.
Yes.
To tell the story.
I should be partying and I'm stuck here with you guys.
I'm sorry, man. I'm sorry. I promise after this life's a party. Well, or so you should tell us. Why don't you start with little interesting background to all of this? I know you're the center stage today, but how did it all begin? You have some common friends from the IIT startup circle.
Yeah.
A lot of folks who have been on our show before. Farooq from Find, Zishan from Topper. Tell us how it all began for you.
CoCubes started with Vibhor. So Vibhor and I started CoCubes. We are the co-founders. We were roommates in IIT Bombay. And at that point in time, we didn't like each other so much. But, as the love grew over time, and when we were getting out of IIT in 2005, we wanted to do something together. So it was in 2006, my mom gave me a call. I got a job in Inductis, a data analytics company, and my mom gave me a call and she said, "Beta, ye uncle aapse milna chahte hain." And I said, "No, I don't want to meet him." And she said, "No, he's going to come over today and, meet you." I had no option. So he came over and he said, "Harpreet, I want to meet your HR." And I said, "Uncle, what do you do and why do you want to meet?" And he said, "I'm a placement officer in this college in Sangrur, this, about a far off place in Punjab. And I want to invite your HR to come to my campus to hire people." And I said, "Okay, I'll get you to meet." And he went to meet and he left after 10 minutes. So I forgot about it. Then 3 months down the line at a family function, dancing, I caught up with him and I said, "Uncle, you had come and what happened?" And he said, "Beta, hum Delhi, Bombay, Mumbai, sab jagah jaate hain. Sabko bolte hain, aao, aao. Sab bolte hain, aayenge, aata koi nahi hai." So, we go everywhere, but I tell everybody to come, nobody comes. So I went to my HR. And I said, what happened? And he said, "Yeah, this college is 300 kilometers away. And if I go there, I'm unable to hire, I'll lose my job." So, we called Vibhor, we looked up the internet, we found out there are 34,000 colleges in India. This is 2006. And all of them in tier 2 cities, whereas all the companies are in metros.
Right.
And that is when the idea of CoCubes came, which comes from the first 2 letters of 3 words connecting colleges and companies. So CO cross CO cross CO became CoCubes.com because of lack of any other domain name we couldn't find it.
Clearly showing your engineering chops.
Absolutely.
In
We're
everything.
very proud of it.
Yeah.
So that was 2006. It took us a year. Vibhor left his job first. It was Microsoft Research and came down, said, "Maine naukri chhod diye." Then I had a month later, I had to get my retention bonus. So it was 2 lakh rupees. So, I got that, and with that we started CoCubes in 2007.
Wow.
That's how we went. And so from 2007 to now, it's been 12 years. So when we started the company, the 2 people who took some angel money, we actually at that point in time was the second person in an entire batch to start the company.
Okay.
The first one was Gagan Goyal. I think you might know him.
India Quotient.
Yes, absolutely.
Yes.
So I was the second guy. Surprisingly, both chose EdTech. Okay. Or HR tech or whatever. We didn't know that we were making this mistake.
This is pre-startup. Like no one funded people back then. Like you had to know an uncle to give you money.
You had to know somebody. So there were like 3 venture funds. There would be maybe Matrix, Sequoia and Lightspeed, and then you're like done.
Yeah.
And there's nobody else you can. And so by the way, then that was when Ojas Ventures started, which was by NS Raghavan, who's the co-founder of Infosys. And we eventually ended up getting funding from them in 2009.
Yeah. And when you started this, again, this was IITB, the same batch, I think, as a few of these folks.
Yeah.
You chose to start this with what in mind? Like, what was your vision then? And in this more number of years journey, how did it grow and change? Like, is it still the same product or concept it was day one? Or how many times did it evolve? Or tell us a little bit about what you do and what it did.
I think when you start, you just start because this is a problem and you want to build $1 billion company in 5 years. That didn't happen. We made a neat amount of cash in our exit to Aon Hewitt. But the idea was connecting colleges and companies. Ojas funded us. We went down that path of taking an office, hiring a sales team, and we found out that colleges can pay for this service.
Oh.
So, because there are so many people who want employment, but only few jobs. So corporates might not pay for fresher jobs, but colleges can pay. So we started working with colleges. I remember the first college pays us 10,000 rupees as an annual subscription. The average fee today we charge from college is about 5.5 lakhs or so. So, so that grew obviously. But we went down that direction from 2007 to 2012. In 2000, and by then we had spent all our VC money. We had raised about 10 crores in 2 rounds. We had taken on some debt. We were about to close a large VC round, which didn't happen. And now we were staring at a place where we were connecting colleges and companies, but still not working out, because even if you connected college graduates to companies, if 300 people traveled from Sangrur to Delhi and only 3 got jobs, nobody was happy.
Yeah.
Right? So whatever money we had, little money, we bought an offline assessment company called S-Quotient, and we became an online assessment company.
Nice.
Right? And we were always product tech, etc. So we knew how to do that. So became an online assessment company. This was 2012. And then went down that path.
I see.
And I remember, sitting with Vibhor, talking about saying that if we go down this path is not $1 billion path. This is the path of building a profitable company.
Right.
And we had a choice between doing that versus, so we were 120 people then. We had to let go of about 80 people.
Wow.
And 40 people remained. We had the choice of letting go of about 110 people and doing something drastically different within the space, which had, more option but wouldn't generate immediate revenue. Mm-hmm. But we had taken on some debt from people which was not supposed to be in trouble. We would, they'd just given it on trust and we were supposed to return that money. Right. So we chose the path of saying we'll build a profitable company. So went down that path. That worked out. In 2014, 15, we started talking to Aon Hewitt. It took 2 years to get the deal done. 2016 December we exited. Right. And so it's been good after that.
Looking back at this juncture which you just mentioned, right? Your first thought was to build $1 billion company and you had a plan for it.
Yeah.
You had to sort of sidestep that and do this because of the situation. Why at that point did you think that this is not a potential billion dollar company? In fact, I would say the online testing and the online assessment space now is booming, right? I mean, was it not hot then? Was it something you...
It was absolutely not hot then.
Okay.
I think, at that point in time, we were going and selling online assessments to companies. Companies were saying, Arey, I can take a printout in 1 rupee. Why should I pay you 200 rupees for an online test?
Wow.
Right?
Okay.
So I remember from 2012 to 2015, that's all I heard.
That I can make someone write this.
And for 1 rupee by taking a printout, why should I do it online?
Right.
But today, genuinely, so we are now part of Aon Hewitt, the second largest assessment company in the world. What is happening is now this has become part of every company's budget.
Yeah.
So because it has now become part of budget, the market is now set.
Right.
So now we are seeing actually quite a lot of growth, which was not possible earlier. And this, I think, is a reminder to every entrepreneur saying that the market decides it.
Yeah.
Your timing is important.
Yeah.
So I think we were a little early. Most of the things we built in 2007 is now we see somebody coming and asking for them. Like an online interview process and stuff like this. We tried selling earlier. One customer we were able to sell. But now is when companies are asking for it.
This is a testament to your, resilience in staying afloat and staying, on this path, right? In a lot of ways.
Majboori ka naam Mahatma Gandhi. And I'm saying like what option did we have? We could have shut down and gone home.
Right.
And I remember having a conversation with my coach, TVG Krishnamurthy. I'm saying, and I wish every entrepreneur out there gets a coach.
Right. Like a mentor, coach?
I just like the word maybe coach more, but essentially someone who's smart, who has seen the world in many more ways that you have and who can give you objective advice. Right. And I remember, being in a place where like for 2 years we ran CoCubes in the way that on 25th of each month we'll start calling customers to pay because we had to meet payroll. One thing Vibhor and I are proud of is that we have never missed payroll.
Wow.
Ever. Obviously our salaries didn't come or but
I hope they have now.
Now
have you accrued for 15 years?
Absolutely. So, but and I remember and a friend advising me, yaar, dekh, kabhi nahi chalta hai. So it's okay to let go and maybe do something else. And then, I spoke to TVG and we were doing all these different sorts of things, trying to figure out what to do. And he said, Harpreet, forget everything. You started in 2007, it's around 12 now, In 5 years, you have built some asset. Just find whatever is valuable and protect that.
Yeah.
And I think that advice changed everything for us. Like we said, okay, what we've built is connections with colleges, connections with companies. So from tomorrow morning, we'll start asking for money for assessments, which we were selling free for now. And, that changed everything. And then I'm saying, what option do you have? Then when we decided we wanted to sell the company, we had an option of taking PE money to grow it further. We didn't do that, precisely saying, hey, this will only become so big. Otherwise, we have to exit.
In the time when this exit conversation was starting, you all were obviously, you're growing, you were attractive to an acquirer. Had competition creeped in? Like, what was the...
No, absolutely.
What was the situation then?
So I think we are the first SaaS exit in India. If you consider 100 crores or in that amount to be reasonable scale,
that is scale, dude. I think most people listening would be very happy with that kind of number.
So I think the first SaaS exit,
$15 million.
Yeah, that's a significant amount. Yeah,
and so after us, our one competitor, Metal. They got acquired by Mercer. So, so
that was recent, very recent.
Like 4 months ago, 5 months ago. So I think it has been in that direction. So things have heated up in our space. I think from the time we sold the company to now, our revenue has, in 2 years, it has grown 3.5x.
As a result of the distribution you got or the backing you got, or tell us a little bit about this, the acquisition part itself, and then maybe the post. Like, how did the deal come to you? Like, most people here and listeners, like, we don't rarely see or hear about the inside story of how you say yes to someone who's willing to buy your company.
So I can tell you two sides of it. 2012 we were not doing well. We wanted to sell the company. Nobody wanted to buy it. We went from one person to another. I think the max offer we got was 5 crores or 6 crores, I'm saying basically peanuts.
Yeah.
Because everybody knew that,
you were desperate.
We were desperate. Yeah. And I think that's the way folks work. So what we learned the hard way was, you cannot sell a company. People can only buy your company.
Yeah.
So we went back to building the company. Like I was saying, the advice that just go focus on whatever asset you have created and work on it. That's what we did. Then Hewitt was a customer. And, so the recruitment manager told somebody, hey, we do this. And the person who used to work in Aon Hewitt, they went and came and had a chat. And 2-3 chats. And he said, will you be interested in something like this? So, it was proposed by Aon. And we said, why not? Just that I didn't know it will take 2.5 years from that first conversation.
Of course.
It has taken more time than to convince my girlfriend to marry me or etc. It's been like the longest dragged out conversation that I could have heard of.
And what do you think caused that though? I mean, what can you share about it? Is it just due process or is it just the meeting of, both of your teams and their teams? Did you start working together already in these 2 years in some way or is it now?
No, we were not working together. We were doing 1 or 2 bits testing each other out maybe, but maybe the trip to Philippines to figure out we can open an office together, stuff like that. Okay. But generally we didn't do it. I think what took most of the time was legal stuff. And the fact that to push a deal of this size within a company which is worth $27 billion, you need a champion. Right. You need somebody who really wants to do the deal. Otherwise, for $10-15 million to get lost in $27 billion is just very, very easy. Yeah. Nobody cares. Yeah. Right? So, you spend time in finding your champion, and then he goes to legal, he goes to finance, and then there is due diligence. Then after India does due diligence, US wants to do due diligence.
Wow.
And then, for example, and this is an advice to all entrepreneurs out there, if you're listening, saying, if you have taken money from an investor, file your taxes, file your paperwork. The amount of it created at least 6 to 8 months of delay just because let's say we had forgotten to file for one. I think we gotten 10,000 rupee extra because of the currency exchange. And we had forgotten to return it. Yeah. And that led to some RBI thing and a sector, and all of that led to like a 6-month delay.
Yeah.
You know? And
oh man, I know this. Yeah.
Yeah.
When you receive money in foreign currency, you plan for a certain amount, but then the day of the transfer, you get
10,000 rupees extra out of 4 crores, and we had to return it. We didn't return it, and then it just all snowballs.
There.
And then you forget it for 10 years, then you want to sell your company, and somebody reminds you.
Oh man, that's crazy. And in those 2 years of negotiations and building up, you were still growing. The company was still.
We're still going. We doubled our revenue, right? In those 2 years. I think one thing that we could have done better was that we didn't realize how long legal and stuff can take.
Mm-hmm. So can you expand on that a little bit? Like, what are the kind of issues that came up in terms of legal? I think that would be of interest to people, right? Just
one you mentioned.
Yeah, you mentioned one, right? But I mean, like that was one of them.
There are different kind of diligences, right? There's financial diligence, there is legal diligence, there is HR diligence, and there is business diligence.
Right.
So one issue came up is they wanted to talk to our top customers. I said, no way. If you talk to our customers, I'm saying that means everybody knows that they're looking to get acquired, and that doesn't work. Yeah. So we said, if you want to call a few of them yourself, you're more than I can't stop you from that. But there is no way that I am going to go to a customer. And one of the letters that we had to do during the transaction was to say that there's a customer who pays us 2 crores an annum. So get a letter saying they will renew it from you or they're okay. That you're doing good service. I'm saying we couldn't get that letter.
Right.
Yeah. Then there was a letter required saying some contracts with customers had things, if you get acquired, you will need a new contract.
Yeah.
Right? And they were a large customer. So, and we never thought about it. This is a contract. Customer willing to give us money. We signed off and sent it back.
Yeah.
And now we have 300 contracts.
Right.
And 5 of them, which amount to some $500,000 of revenue, have this problem.
Yeah.
So then, in this case, we had to go back to the customer and say, if this happens, please give us in writing that you'll be okay.
Right.
Yeah.
So all of these add up. Then, financial diligence, all your accounts need to be in order, A, B, C, D.
Right.
All your metrics need to tally. All of that. What is the reimbursement process? And I think this is more because you are getting acquired by a big, large organization who understands all this and values all this, and they're a listed company. Right. So I think they were right in doing all of these things. So that as a company, as an entrepreneur, you don't understand the importance of it.
Right. You're running a business. You want to basically figure out, okay, this is my problem, this is how I'm solving it, this is what I'm going to do, this is how I need to move. You don't care
About the fine print.
Yeah, we all let that stuff slide more than we should, and we shouldn't let it slide. I mean, like, I know that.
One interesting thing was, so we went to a lot of people to say, hey, we want to, we are looking and we have some interest. Will you take our deal? Will you become our, investment banker? Nobody wanted it.
Oh,
because the size of the deal was small, and they said, they said, okay, if there was less interest,
right.
And then I said, okay, we'll just do it ourselves.
Oh God!
So a lot of learning. I can become an investment banker now, maybe.
You should become an investment banker now. I mean, like, seriously,
I'm good. I'm good with dropping off my daughter to school, picking her up, and I think I'm good for now.
No, but it is a problem, right? I mean, like, because most of these investment bankers are
they're used to the hundreds of millions of deals,
exactly.
And
yeah. So then this
10-15 is too small.
Yeah, their fee structure is also kind of set in a way that if your deal is small, then their fee structure becomes out of whack. So then that becomes a big problem.
Right, absolutely.
Yeah.
But there must be that's an opening for a startup in investment banking, is what I would think.
Is it really though? I don't know, man. I mean, like, it's such a weird business, right? I mean, like, you dealt with them, so you would know, right? But I mean, like, that space to me feels like it's not...
It's very related to outcome.
Yeah.
And, I'm saying you likely need to have connections. You need to have some expertise in a particular sector or some relationships to make it.
It's a sales job, but it's also it's a boys' club job also, right? It's like you have to be one of the guys.
Yeah.
That's kind of the space that I think investment banking particularly. More so than
able
VC.
to trust you. Hey, look at this company, and the person should tomorrow morning look at that company.
Yeah.
Right.
On that note, I think we're going to take a quick break, come back and talk some more.
Hello, everybody. Welcome to another great week on the IVM Podcast Network. If you're not following us on social media, please make sure you do. We're IVM Podcast on Twitter, Facebook, and Instagram. This is a really exciting week. We've got 2 really big shows releasing this week. The first show is Dreaming with Your Eyes Open with Ronnie Screwvala. This is a companion podcast to Ronnie's best-selling book, Dream with Your Eyes Open. On this podcast, Ronnie shares his vast entrepreneurial experience and takeaways from each chapter with me. New episodes will be out every Tuesday, and also don't forget to listen to the audiobook. The audiobook's available for free on our website and a whole bunch of other platforms. You'll find it wherever you look for it. The second show that we're really excited about is called The Note with famous journalist and news editor Maruk Inayat. She cuts the clutter and analyzes the stories that matter to you. Join her on the podcast where she gives you pure analysis on what's happening around you. This week, she has a 3-part exclusive series about the Indian elections. Speaking of the Indian elections, also check out the latest episodes of Thale Harate, Simplified, Ganatantra, The Seen and the Unseen, Election Soundtrack, and Cyrus Says It's Cock and Bull for our thoughts on the elections. This week on Cyrus Says, Cyrus is joined by millennial businesswoman Natasha Malpani Oswal. She talks about her education in Oxford, Stanford, and Cambridge, returning to Mumbai to head Dice Media, and recites poetry from her book Boundless. On the Sponge podcast, Ambi Parmeshwaran discusses how leaders become great with characteristics of humility and humbleness. On States of Anarchy, Hamsani is in conversation with Professor Felix Pecking to discuss tariffs in Chinese history and how it's employed in today's context of trade wars. On Advertising is Dead, Varun is joined by Pranay Swarup, co-founder at Chatterbox. They talk about influencer marketing, the Fire Festival fiasco, and a whole lot more. On Golgappa, Trupti is joined by IVM co-founder Kavita Rajwade as she talks about her personal and professional journey and how the concept of a Marathi podcast came into being. On Thale Harate, we have an election special where Pawan and Ganesh talk to Raghavendra HS about the hows and whys of voting. And with that, let's get you on with your shows.
All right, welcome back. Interesting part of another side of the story which I want to hear is, what was you obviously settled at a number and you actually came up and you did a deal. How was that process, and what made you say yes to whatever? Was it what they were offering? Did you negotiate? Was it your paper valuation? Because you were funded, so I assume that obviously there was a standard valuation metric you were following. How did that part go?
Yeah. And I think, maybe sometimes we get the advice and we give the advice as an angel investor to startups saying valuation isn't everything. There are other terms and conditions that you should be careful about. Offers, ABCD.
Correct.
And I think when you're selling a company, valuation actually is kind of everything because you're selling. This is your final sell.
Yeah. It's the last number you're getting.
This is the last number you're going to get out of all the sweat and hard work that you have put.
Yeah.
So I think there was a reasonable amount of to and fro, like I said, first with the Indian team, then with the other team. And one of the friends who gave extremely good advice in this case was Kashyap Deora. I don't know if you know him. Again, an ID Bombay alumni. Right now in US running his company, Hypertrack.
Correct.
So I think I got extremely good advice from him to manage it. And his advice was simple: have a plan B and have the guts to say no. So I think if you don't have a plan B, if you are in a desperate situation, there's no way. The person can sense it. Yeah. You won't get a good offer. So the only way to get an offer is you have the ability to say no. And I think that happened multiple times. I think the deal would go off every 2-3 months, then something will start or something else will start, and we'll start talking again.
So being able to walk away
is super important.
Is powerful also.
It's powerful.
I think that applies to all of this stuff, right? Even if you're talking about your customer contracts and stuff like that, even in that context, you have to be able to say no, right? If you're desperate for every little bit of revenue that comes to you, which sometimes we are, but you got to be able to hide it too, because otherwise you're going to be taken for
And
a
then
ride.
you get caught in saying, a customer is giving me this, but he's demanding this. I don't want to lose that revenue.
Yeah.
And I think it applies to product building
Of
and
course.
running companies like day in and day out.
Of course.
Definitely in a B2B
Any
business.
negotiation, you have to be able to walk away, right? If you're not able to walk away, I mean, like, you lose just simply through game theory, you lose.
Absolutely.
Right.
Absolutely.
Coming back to, of course, so this negotiation was going on. Obviously, this is where you and Vibhor as founders were, managing this whole thing. What was the size of the team, and how did this benefit everyone? I mean, this is also another hot topic, which is fairly unspoken about, right? ESOPs and, payouts post-acquisition. Does everyone get super rich? Like the only real story we still have is Infosys ka peon has become super rich. There are really no other stories or...
Flipkart, no? Flipkart.
Yeah, but we don't hear who they were.
We don't hear
or
who
what
they were, but we
happened
hear
or-
that there were a lot of them.
Yeah.
Yeah, everyone just becomes silent and
lot
goes
of
and hides in
crorepati's
a
is what we
cave.
hear, but we don't know who they are.
So how did it happen for your team, and how big was the team too?
So I think like I was saying, 2012 we had to let go of people, and from there to back to 2016, our team was again about 110 folks, and spread across the country. A lot of old folks as well. So I think about 23 people made money from selling this company. Did they become super rich? No, but folks were able to make more than 1 crore rupees each. I'm saying let's say 5 of them in the transaction.
Yeah. And that's substantial amount of money for an individual. Yeah.
I'm saying we were glad that we were that they at some point put faith in ESOPs, and we were able to return that faith.
Right.
I think that to us was critical. I remember that when we started in 2007, by 2007 end we had ESOPs like for everybody in the company. And then we want to say, look, this will have value.
And you maintain those all the way till now?
We maintained those because the interesting part is after 2012 we never gave ESOPs because nobody wanted it, because they had seen a downturn in the company,
Right.
and suddenly everybody lost faith, saying do ESOPs really have value?
Right.
So the folks, and then nobody wanted it, and everybody wanted salary and incentives. So all the folks who made money were the old folks who were in the company. There was folks who had left the company in 2011, 2012, were now in US after an MBA doing a job. We had to call them up, and because their
names are still there.
The names are still there, and as part of the deal transaction, we had to close it. So this is another other thing, that when do we tell everybody that they need to sign the letter, because these are preconditions to closing the deal.
Correct.
And you can't tell them too early.
Yeah.
Because
News will get out.
Exactly.
Yeah.
So you have to call somebody in the US saying, we want this letter by tomorrow because the deal needs
So
to
how
happen.
does that work? I mean, like, I'm sorry, this might sound a little naive, right? But I mean, like, ESOPs are generally the employee who has it has to put in some money to get the benefit of the share, right?
Depends.
Depends on the sales
So
value.
you can say, hey, look, today I'm giving you this share at 10 rupees.
Right.
And tomorrow, whatever value it sells for, it is your money.
Okay.
Right. But I'm thinking we gave it for free. We didn't charge anything for it, or I think 1 rupees.
Yeah, the minimum.
At the minimum price, at the base price. And then the person accrued it every year for 4 years. That was the vesting period.
Okay.
And if they left in between, only what they accrued is
what they held.
got.
Yeah.
Okay.
The thing was that when people leave, I think this is key, where a lot of employees make a mistake, or employers also make a mistake, saying if you leave, then what happens with your ESOPs? Because if you buy them, if you convert them, then you have to pay tax on the notional value, which doesn't work. Because the employee will say, hey, look, I am not going to pay 10 lakh rupees tax.
That's what I was wondering. That's
Exactly.
What
So in that case, at least we had given a letter to folks saying, we're giving an extension for buying.
Okay.
And that worked.
Right.
And that's legal and valid.
I'm hoping.
No, No, but it made out for everyone. That's what I'm saying.
Absolutely.
So then
Absolutely.
it
No,
worked.
look, we could have easily not called the folks.
Oh.
Because the only base we were the fund to tell the company who was acquiring, saying this is what we have.
Right.
This could have been easily swept under the paperwork. Nobody would have known because there's no trail on it.
Right.
Yeah, ESOPs don't get...
They're not registered.
No,
They're
no,
not-
You have to register the pool.
You have to register the pool. You don't
You
have to
register the pool, you have to
individual.
keep a ESOP booklet and
Yeah.
all of it.
Yeah.
But it's a physical register.
Yeah.
So I'm just saying that to be able to call somebody who in 2016 who worked in your company in 2011 and then you speak like once in 2 years, you have to find the number of the guy to say,
Yeah.
I want to find this person.
No, so my question is, do they have to exercise the option? Do they have to give you something back at that point for them to exercise the option, or have they already exercised the option at that point in 2007?
Like in 2011, you mean?
In 2011.
Yeah, so it depends case to case.
Okay.
One person out of 23 had exercised the option.
Okay.
He had paid us the money and paid taxes on it.
The rest of
Other folks had gotten an extension later.
Okay.
Out of 23 folks, actually around 12 were still working.
Okay.
And out of 11 who were out there, one had exercised and 10 hadn't exercised. They had a letter from us.
So, but then they also need to exercise before you do the transaction to sell, so
Yes,
that they can
yes,
get it.
They
Right?
had. And
Oh,
then
wow,
then
okay.
they had to exercise at the current value.
At the current.
At the current value.
The
Just that,
guy who paid the tax early, he paid less.
yes, just that the tax now they will pay at the end of the year. So,
Okay.
they're signing
So
a
they're
letter.
fine,
and they
yeah.
have to, absolutely. They get the money first.
They get the money first. Okay.
Yeah.
All right. Interesting.
Yeah.
Very interesting stuff, man. This stuff is confusing and interesting.
And that's why a lot of people, again, I don't think it's fully understood even today.
It's not.
With new employees, people who join startups, I don't think employers do a good job of even,
Yeah,
being super clear about it.
I think even one of the things that entrepreneur doesn't take into account, and we did not take into account, is if you give somebody ESOP, then it is actually part of salary, and the company needs to pay notional tax on it.
Yeah.
So you say, "Oh, I have this, I can give it." But really can't. And if you are, then it is important for you to have faith in it, for the team member employee to have faith in
Right.
it.
It's a two-sided relationship you're going into. Yeah.
Right.
Yeah. So see, these are the small things which I guess people, again, it's like the legal fine print. You say it's a problem for another day. When it happens,
absolutely.
We'll deal with
It
it.
It takes 2.5 years to do the deal.
But then you should be prepared for this. But great. So congratulations. You finally closed the deal after 2 years.
Yeah.
There's another very interesting term which we only read about in blogs, which is called golden handcuffs. How are your golden handcuffs? Or do you have any?
They
Or
came off today.
how did they happen?
So-
or what's that like?
I think this is another part of negotiation in the deal. So we had golden handcuffs. They ended about 4 months ago. We wanted to quit then. And, then our employer, Aeon Hewitt, said they wanted to stay us for some more time. So we have stayed, and, now the entire handover and everything is done. So all our money is in the bank. It has been a genuinely good transaction where Aeon invested and they wanted some output, saying you have to meet these revenue numbers. We have met 20% over and above them. So, what we're happy is in the entire ecosystem, from employees to angels and everybody to the person who acquired, has been able to, make money off it.
Yeah, and it's been a green deal.
It's
also.
a green deal, which has been nice.
Yeah.
I think the key part, so we had those golden handcuffs, and I think they came off in November last year.
Right.
I think the key here is, people start asking you that, when will you leave? So now you are selling. And I think we were upfront saying, hey, look, if I had to genuinely stay, why would I ever sell my company? I am an entrepreneur by mindset.
Yeah.
If I wanted to genuinely stay, why would I? And we were upfront with the team saying that at a certain point we will move on.
Right.
And generally truth has worked for us over the last 10 years.
Right. No, so that's great. What are you doing next, and any other parting words that you want to share with everyone who's listening? And obviously you've shared all your experiences. But what next? What will you do differently, or will it be still EdTech? What do you think of the rest of the ecosystem? In fact, did you at any point collaborate or with anyone else, any other startups? I know, in this whole story, did you ever look at everyone else who's gone the unicorn route and think that this is what I want to do next?
I think when you start a company, and this is, we never thought, I think we did not know the terms B2B. B2C. We did not know the terms EdTech, HR Tech. We did not think of it as market size. Our earlier model was, we will help a company do campus hiring. We will charge them per campus 3,000 rupees.
Okay.
And then, I was sitting with a person who runs PropTiger. He said, यार तुम 3,000 रुपए per campus लोगे तो कितने campus होते हैं? कितने campus hiring होती है? And suddenly realized, oh, market size is 1 crore. This doesn't work. And he made me realize that, our business model is wrong. So I'm saying, as first time entrepreneurs, we generally did it out of passion. Saying, hey, this is the problem I really want to solve. I came across this problem. I am willing to leave my job to solve this problem. I think that passion is important in whatever you do. I think it is the only reason Vibhor and I were able to do it for 12 years. Okay. If I think a lot of companies, and I heard the podcast on Zishan and, with other companies which have started in the Powai ecosystem or during the years when boom happened.
Correct.
I think a lot of companies started because startup was supposed to be fun and, it was supposed to be the thing. I think you really need to believe in what you are doing. If there was one thing I could tell anybody, you have to believe in the idea that you are following, in the problem that you want to solve. And that can make you last. And then even if in bad times, you are happy, you're okay to say, I will push on and I will make this work.
Yeah.
So that does, I think going forward, I am interested in the career space, so I keep looking to do something. I haven't thought about it. Goal is to travel for the next 3, 4, 5, 6 months. I do mountaineering, mountain running, so, do more of that.
See, he's making your trekking look like nothing.
Yeah, man. I know. Not even running anymore.
Not even running.
But I know.
So, Vibhor likes fintech.
Okay.
So, hopefully we will, he will start liking career or I'll start liking fintech more. So we'll see what happens. Awesome. But right now he's bought a house with a swimming pool in Gurgaon.
Because you can have one in Gurgaon.
Because you can have one in Gurgaon. In Bombay, I'm living in this Kholi, man.
Even after a successful exit.
Absolutely. What can you do? But so we'll see what happens. But the goal is next 6 months, get out of our own well. Hopefully get into a pond and see what is out there and do something.
Amazing. Thank you so much for sharing all of this with us.
Thank you guys for hosting me.
It was a great conversation, man. Really, really fun to talk about this stuff.
And what about, where can people reach you if they want to get in touch? And of course, I'm sure a lot of budding entrepreneurs or even existing ones might want to ask you things or ask you for angel investment.
Absolutely out there. So I am on Twitter, HS Grover, and LinkedIn. Just send me a message. More than happy to say hello, meet folks. I have time.
All right.
And also, guys, if you are not subscribed to the Slack channel, please go to the website, ivmpodcast.com/Shunya1. There's a button over there which says send me the Slack invite, and Abhineet will send you a Slack invitation. Also, just wanted a quick reminder that if you can drop a review, wherever that is, iTunes or CastBox or wherever that is, please do. That helps.
Awesome. Thank you. Talk to you guys next week.
How does one separate news from opinion? I'm Mahrukh Inayat, a news junkie, but not a big fan of debates. I love facts, and I like to stick to them. No frills, just pure analysis. This election season, is Balakot a game changer for 2019? Did Priyanka Gandhi Vadra join politics too late? The Chowkidar Wars. Who's really winning? I will cut the clutter and analyze the stories that matter to you.
You can listen to the show on the IVM Podcasts app or wherever you get your podcasts.
How aware do you think you are of your laws and rights? Do you look up to laws when you are caught up in situations? Do you know what your rights are when you're stuck somewhere bad? Well, here's a show that can help you move an inch closer to being aware of what your rights are. Tune into Know Your Qanoon with me, Amber Rana. This is a podcast meant to answer all your law-related queries. Catch Know Your Qanoon every week on the IVM website or the app or anywhere you get your podcast from.